potential tourism when you are talking about cultural enterprise. Arun, if you're ready, you can go.
Absolutely. This screen setting works perfectly. So we can scroll in exactly the slides that in the sectors that we're covering. Sure. So thanks, Vidya, for that. So we can, go through the contents of the report, and the report itself, should be available to you post this event, I understand. So
Yes.
in terms of the methodology through which, we worked on this report, it's probably the correct time to cover that. So, these 5 sectors that, Vidya touched upon are the core sectors that NICE has taken up, to start with at least, right? So, and the way we went about this report is to kind of create a long list. At Venture Intelligence, our bread and butter is to kind of track private companies, whether it's their financials, their transactions, and their valuations, right? So in that sense, we have the whole host of sectors covered in our database. So what we did, along with the folks from NICE, is to create a long list of companies that have received funding in these sectors over the last 5 years, and with a specific focus on what happened in 2021, gave that long list to the NICE team, and have them kind of apply their criteria as to what constitutes within these broad sectors or NICE enterprises. And then, they came back to us, our analysts, with the list. And then, we kind of looked at the data, massaged it, put together, the analysis part of it. And that's how this report is presented it to you. So essentially, I'm going to run you through these report pages, in a rapid fashion, but it will be available to you for download and, kind of analyzing at your own convenience down the line. So we can proceed to the next section. So the massive, kind of interest in these sectors among PEVC investors is what is evident. So we all know that 2021 was the largest year for private equity venture funding across the board. Right? Within these 5 sectors too, right? It's no surprise that it was a banner year 2021. The 90 odd investments touching up about a billion, $1.76 billion, or 13,000 crore plus gets covered across these 5 sectors. It's just amazing, to see the kind of development. We all used to think of, technology as the one and only game in town as far as venture investing is concerned, and the private equity folks were associated with far bigger things like, manufacturing and infrastructure and so on. But to see the kind of focus that this sector has received in the last 3 years, especially, is just amazing to see, and we will see more details as we go next. So we can kind of forward to probably the sector, page by page. You can show them the highlights. So exactly, right, the kind of growth we are talking about, it's like, obviously from 2020, where it took a dip thanks to COVID in the initial part, to a strong bounce back, in the middle of the year. And then 2021 was just a rocket, right? So all of that is macro numbers that this slide, shows you. But we can dive into this sector by sector kind of thing on the next image, right? So if you look at, in a sense, the venture industry, private equity, which we, in our definition, private equity is the mother set, of which venture is a subset focused on early stage investments, and we treat angel investments separately. So private equity is institutional capital, angel investments is individuals, just for, the folks who may not know the definition. So in that sense, if you look at the sector-wise breakup, health, beauty, and wellness, dominated 2021 at least, right? So it grabbed almost 74% of this $1.76 billion, and almost 9,600 crores, went into just this one, these 3, subdivisions in that sense: health, beauty, and wellness. And Winnie Cosmetics, which is a phenomenal personal care story that we all know about, and very interesting to know that, the company is just a decade old. You have a private equity firm come in and buy a majority stake in that company, and along with all its brands, including its natural care brands, right? So it's just, and the entrepreneur is still at the helm running the show, as I understand. So and then there are a bunch of other beauty product companies that raised money, significant amounts of it. And that MyGlam is a good example. They attracted from the biggest of investors like Warburg Pincus, Process Ventures, which we better know as Naspers, in their earlier avatar. And this company in the past has raised capital from strategic investors, both Indian like Wipro Consumer, for example, and then L'Occitane, if I'm spelling it right, one of the world's largest skincare focused, natural focused brands, right? So those are some of the kind of deals that dominated the beauty wellness segment, which grabbed a significant portion of the pie in 2021 at least. And then we had food and beverages get in, and quite a few very interesting brands, Rebel Foods, Biryani by Kilo, both of them raising hundreds of crores. Rebel by Foods more than 1,000 crores. Biryani by Kilo was 200 crore investment, and these are not small. And these are, as we know, as local as they get, right? Food. And very, very interesting that some of this capital is being used by these companies to take, what is necessarily an Indian food flavor, brand overseas. Apparently, they are targeting, the Southeast Asian market, they're targeting the Middle East market and the African market, and even going to the UK, right? So, very, very interesting as to how this mega funding that has become available to local brands is going to be deployed by these, and very good playbooks being established by some of these larger companies that some of these startups in this sectors can really take out of, right? So and then as I said, venture and private equity tends to kind of follow power law, right? So if you look at it, any which way, if you take a look at it from an investment standpoint, whether you look at it from exit standpoint, from the venture private equity investors portfolio standpoint, one or two investments, kind of tend to make a fund, right? So return a fund even, and then it's all jam after that. And once entrepreneurs in this audience kind of look at engaging with such investors, we need to keep in mind, and the best of the entrepreneurs, in the past, to that extent, I know, really understand what's in it, like we deal with customers on the other side of the table, what's in it for the investor, on the other side, if you are really looking at institutional capital of this size and this variety, right? So for them, a power law applies, and they tend to double down on their winners, right? So that's the math that used to apply in the Bay Area, and it seems to very much apply based on the lessons of the last 2 years in India as well. So in a sense, that is the nature of, private equity venture capital. So in this year, health, beauty, within these 5 sectors, dominated, and you will see this apply. So it has been not great going, for the other sectors. Fashion and accessories kind of made, $16 million, 120 crores, was what they managed to attract in the last year. And Beavercoop.com is a good example. Zouk, which is even more relevant to this audience, a vegan lifestyle brand led by, they had raised around 11 crores or $1.5 million, from Stellaris Venture Partners, which is not, a firm that is focused necessarily on this. Most of their investments are in tech, right? So as we kind of go along, we will see that we are no longer dependent on specialist social sector investors to support such companies, right? That used to be the case even 2 years back, right? So today we are seeing increasingly specialist D2C focused, direct to consumer brand focused, investors, including Fireside Ventures, which is quoted in the report. Kanwal, who heads that, has given a nice quote, as you would read, when you go through the report. And that's the kind of, and Stellar is a very, very interesting example where, this started out as a largely a technology fund. Their heritage is actually from a technology, they're a previous fund. But, end of the day, they today, them and people like them, Six Sense Ventures is another example that we will come across a transaction. Very interesting part is today, and Orios is another example. Today and last year, I know they've all had either dedicated one of their founding partners or are actually recruiting a partner level person to focus on D2C consumer brands. So I think that's a great opportunity and a message for this audience, in terms of the entrepreneurs. So let's go forward. Home decor and furnishing, again, did not, like I said, power law did not attract. One notable, cookery where company, Indus, where, Chandu knows the company very well. Indus Valley, kind of raised around 13 crores just last year. But that's not a sector. Experiential tourism, given all travel was challenged in the last 2 years, no surprise that that sector did not attract much attention last year, right? So we can go forward. Yeah. So in terms of, this is just to kind of give you a flavor in terms of how, kind of overall this pie splits up. We've kind of sliced it, by region, by stage, so if you look at it, that one large buyout by KKR obviously will take buyouts to this thing. So since we've stayed stage agnostic, typically this kind of FMCG brands we've seen, it's not been the cup of tea of venture investor, with few exceptions that I already named. Today there are B2C focused funds per se, but the average venture investor typically does not participate. They are more focused on tech. So if you have a tech enabled play, today your average VC firm which is more tech is, but they're getting into the space as well. So essentially this has been the domain of the growth capital investors, whether it is mid-market private equity funds or this, but that is changing fast as we just see. More increasingly venture firms are participating. That's what we see, a split going forward. We will show you a split by kind of region, and frankly this does not carry too much of a message. Very interesting is that Mumbai based entrepreneurs have kind of attracted far more capital, but as we all know, such enterprises are spread across geographies. We can move forward. Yeah. So these are some quotes in the reports. This is more emphasis by sector, how it's kind of moved across the years. In the interest of time, let's forward on this. We can go to the exits part of the slide, which is page 20. So yeah, so we can hold here. So very interesting kind of trend. At the end of the day, again, for the benefit of the entrepreneurs, you are dealing with investors, and for whom the investment comes with a time ticker on the day they invest. They look at an exit as a potential when is it that I'm going to exit, right? So since it comes with that kind of thing, where have the exits come from for these investors in 2021? And very interestingly, the food and beverage sector actually dominated 2021, starting with an IPO, right? So we had Dodla Dairy, which had attracted capital from TPG Growth, which is a global firm. And this kind of actually reminded me, one, the IPO phenomenon is today available for entrepreneurs to tap, and two, you have in the past also companies from the dairy sector giving good exits to investors, and Dodla is one. I remember as back as in 2014, Carlyle, the biggest earliest of the private equity firms in India, got a very good exit, 4.5x return from Tirumala Dairy when Lactalis, the global dairy firm, came and bought them out. So increasingly we are seeing Mama Earth became an unicorn early part of this year, but they gave a secondary exit to some of the best known Fireside, Stellaris, Sharp Ventures, and so on. Their investors got a good exit through a secondary sale. So not just IPO. And then we all know that Reliance Retail came and bought out Ritu Kumar and a couple of other brands. So the exit here is very interesting in the sense that all three types of exits: IPO, strategic sale, which is Reliance coming in, buying out Ritu Kumar, the brand, and also inter-PE firm sales, which we call secondary sales. All of them are available so that the entrepreneur is not disturbed and he can kind of live his dream and follow his path, right? So that's very interesting that we are not pigeonholed into any one particular type of exit. So in the interest of time, we just speed up, we'll go forward. One of the key things that you need to note is the angel investment activity. It's picking up, as you can see that this thing, a lot of investment. And basically all of this, angels included, Chandu and company will tell you better. They take their signal from their follow-on investors. And their follow-on investors today are getting exit via the IPO and other routes. So it's kind of cascading and the interest is cascading. Very interesting couple of investments. NUA, we had the family office of Deepika Padukone came in and invested in that company alongside the VC investors. The point to be noted here is she's not just lending her brand or even getting paid. She's actually investing cash into the companies, right? So that's another avenue that's opened up for investors in celebrities and their family offices putting in capital in such brands. IU Health actually attracted money from the founder of Mama Earth alongside a VC investor. So it's not just angels, angel networks, professional angels, but also such interesting family offices that are available to brands in this space. So this is something that I thought I'll point out, and I'll actually wind up by a couple of points, which is just the VC industry, like I said, follows a power law. There are certain seasons and there are certain reasons for those, and the entrepreneurs, best of them I've known, have got the timing right. So, and they know when to hunker down, and then they know when to tap the markets, and they understand the other side of the table. And and there are very, very interesting set of investors that have combined today to come in, not just in the venture side, but also from the family office side, and also most importantly, I think from the acquirer sides in the form of Reliance Retail and others. So thank you very much and all the best. I'm happy to answer any questions as we go along. Thank you.
Thanks so much, Arun. Fantastic presentation, and thanks for the collaboration on the report. Now this report is available on the NICEorg website. We will shortly publish the link for you to download the report. Having said that, now I'll quickly dive into the panel discussion on the report and gather thoughts from all the panelists present here today. So Arun, just quickly, because you've seen countless other reports and you've been tracking deals for a while. So what's your sort of quick take on the culture sector as such?
So I would, again, think of this. I have no particular viewpoint, on, let's say, a soft corner towards this sector, right? So coming at it from that perspective, because at Venture Intelligence, we track all sorts of investments. So I think the one key point is the timing, right? The timing seems to be, very, very opportune in that sense, right? So in the last 20 years plus that, I've been tracking venture private equity investments, I haven't seen, some of the investors who are tech and tech only, dedicate partners and the kind of resources to do this. And, we all saw, if you've not, we must, right? Shark Tank phenomenon, right? In Shark Tank, India was a revelation, right? And the biggest of the angels there, and including your own NICE supported, enterprise in the Ayurvedic space, had support from some D2C entrepreneurs. So we're seeing a lot of phenomena, actually happen in parallel. Entrepreneurs who are still engaged in businesses, turning entrepreneurs and investors and supporting companies. All of these are, something that actually break the rules. So bottom line, I think the timing is very, very opportune for some of these brands to break out.
All right, thanks. Shefali, I mean, as founder and partner of Heart Ventures, I mean, it's kind of momentous, right? You being here with us, and then you've launched this fund recently. It's not like, it seems like the universe is sort of conspiring in some ways. So what was your sort of take, with these sort of nice sectors, if I can say that? How did this come about? And what is the opportunity and challenges that you see in this space?
So thanks. So firstly, it's been great to see this report because it gives us validation that actually investing in cultural economy is mainstream. It looks like it's getting to be more mainstream, and look forward to how this gets tracked over the next couple of years. So great initiative by you all. So there's a combination of personal stories as well as some research that we did to kind of size the opportunity. So I'll first start with the personal story. So Vipul is a successful technology entrepreneur. He's also a philanthropist. He's one of my partners. And he's seen the early days of VC funding in the tech industry some 30 years ago, where, enterprise was fueled by India's large talent pool of engineers, that were ready to solve the global challenges. And then he also had a ringside view of the handmade crafts sector, with a spouse who's an NID alumna. She was running a handmade crafts business for the last 12 years. So, he became very passionate about the sector and felt that there was a need for better business mentoring and capital, but he, wasn't quite clear about, so we kind of researched the space, so he was discussing this with saying maybe there's an opportunity to create an impact out here. So Vipul and Vinayak go back a long way professionally, and Vinayak and I go back a long way. And we started researching. Vinayak and I were in parallel doing some research on sustainable finance as advisors to a global venture studio. And when we started to research the opportunity here, we concluded that there is an increasing preference for ethically made artisanal products among global millennials and generations further. And in India, this is a natural area of competitive advantage. We have the richest artisanal talent pool, 3,000 plus art forms, 200 million artisans. The sector creates rural livelihood, empowers women, and there's so many, tick marks. And despite all the support, which is philanthropy grants, we just have less than 3% of the global trade and very few global brands, in fact, almost none. So there just seemed to be this opportunity that was waiting to be shaped up. And then when we spoke to impact investors in the investment world, it is not an area of focus for a variety of reasons. There is no follow-on capital ecosystem. So we said if 10 years ago there was no agri-tech funding and now there's a pretty vibrant ecosystem, there are diverse challenges within the sector to solve for. So why not do this? So, that's where this whole genesis kind of came along. We can talk more about the challenges as we go ahead.
Thanks, Shifra. Thanks. That's wonderful. Nice to hear Hart's viewpoint. Chandu, you've been an angel investor for a long time. You invested in tech and non-tech. And you've invested in Indus Valley and other interesting cultural brands. As an early stage investor, how do you view this sector vis-a-vis the tech sector, for example? What's your kind of learning and what's the kind of message that you want to share with other early stage investors in this space?
Okay, right. So let me first off get something off my chest, okay, and not try to be bigger than what I am and seem like as if I'm some, what should I call it, a prescient sort of soul. For me, I look at very simply, is it an investable business or not, first and foremost, okay? I think that's the core. If that fundamental criteria is met, and by investable, I mean a couple of things. One is that there is a team which knows what it's doing, most importantly, has got its all the I's dotted and the T's crossed in many ways. And the second thing is this, that the core of the business model is strong enough. And the business model, as you know, encompasses a few things. If these two kind of somewhere meet, the twain meets, then at least it's something that looks interesting. For me, at that time, the label doesn't matter. That said, I have certain theses. For example, one thesis that I have, which fits very well for the cultural enterprise sort of thing, is I am very bullish on domestic consumption, India brands. And I put my money where my mouth is. In fact, I'm very pleasantly surprised with your report that there are 4 companies in the report that I have invested in, whether directly or indirectly. Okay, and the companies are in the Chai Kings, which is a 56 strong retail chain, outlet strong retail chain of affordable, hygienic tea cadets, as we call it in Tamil, but it's gone beyond Tamil Nadu to even Hyderabad. So the ambition is, can you build a kind of an affordable Starbucks in the tea sector? It's a possibility, so that's what attracted me to that. And today there's a lot of things that you can do with tea, so that's one. The second thing, of course, you mentioned is Indus Valley, the sole entrant, I think, in the home decor and furnishings. So I was the lead investor from Chennai Angels and led 3 rounds before we had the happy fortune of DSG Consumer Partners and Rukam Capital joining us. And today I feel a bit like Devaki, who's handed it over to Yashoda. So I'm very happy that that's also happened. I also find 2 other investments through funds that I have worked with. One is True Good, which is the Hyderabad-based millet and peanut snacks. And then I also have Noble Hygiene through Access Private Equity. And recently I've also invested in Bunbury, which is reusable napkins for babies. Now, you'll all find that there is, all these are trying to be a strong brand and create a customer pull in some way. So one of the things I'm seeing is there a way that somebody can build lots of a strong customer brand, number one. Number two, which is focused on domestic consumption. Here, I think NICE would also do well to include the creator economy. Okay, and I say this with a reason that, for example, I have investments in Nojoto, which is probably India's largest 2-sided content marketplace of creators and consumers in Indian languages. I'm also an investor in Stage, which is Haryanvi dialect-based over-the-top video streaming platform. I don't see why these should not also be included in a cultural kind of a thing, because they are also very rooted in the Indian thing. And I must disclose this. This is a tricky one, which is Truly Madly, which is a serious dating app, So it's a very interesting thing, but it's, a lot of Indians don't want to go the Tinder route. Let me put it that way. To say that we don't want too many casual relationships, we want committed, but we want it arranged by ourselves, not by our parents. So I think it's a very interesting thing to look at. And I feel this creator economy should be also there as part of the NICE platform. So coming back, short point, is it investable? And to Arun's point, we take our cue from, are there follow-on rounds possible? Is there strategic interest happening? If these two, and IPO is of course great, but it rarely happens. So if these two at least happen, then fellows like us jump in. That said, I'm also an impact investor. And what I'm very worried about is Jolawalas, have bleeding hearts coming with no clue of the market. I'm being a little impolite here.
All right. Point noted, and thanks for the candor. On that note, Professor Suresh Bhagwatala, you've been a great supporter of this space, of cultural entrepreneurship in general. You've been observing this space for a long time, and generally, the entrepreneurship and entrepreneurship network for a very, very long time, right? How do you currently view the sort of landscape? Because there is capital that needs to be made available. There needs to be quality entrepreneurs. There has to be business development opportunities, a general vibrancy in the market. So from where you are and what you've been observing, how do you sort of assess the current landscape? You're on mute.
Yeah, by and large, I guess entrepreneurship as a vehicle to address some of the issues that we have to get livelihoods across geographies seem to be now. As in, it has been around in terms of as a possibility, but we seem to be now at an inflection point where it seems to be a career option for people with what Jem says as opportunity-based entrepreneurship, that you're starting a venture not because you don't have a job, but you see an opportunity. Having said that, in culture, while we do have extreme right, scalable 10x to 30, 100x returns that investments are seeing, but cultural entrepreneurship has also been extremely supportive of ventures that are about 3 crores, 5 crores, very sustainable. They don't want to scale. And many of these are run by women because we train a lot of women entrepreneurs. Mm-hmm. And a lot of them seem to be comfortable at the scale at which they're operating. 7 crores, 8 crores, 5 crores. Some in craft, some in food. And the idea is not to say that we shouldn't have ventures like this. We should. Not every venture should be scalable or every venture should be investable. But what we require is a huge network of entrepreneurs kind of supporting each other and not seeing these ventures go down. So having a support network where they even sustain or grow modestly, I think is good enough. And there are many such ventures that we see as a possibility for those who want to bootstrap, or those who want to have lifestyle ventures. There's nothing wrong in having a lifestyle venture. There's nothing wrong in having a venture that supports whatever you want to do in life, right? So it's not as if we should only look at highly scalable ventures, right? And culture, to a great deal, offers this possibility that you could be at a level that's comfortable to you. The food is there. But at any point of time, you want to run and see if you would want to scale. The fact that there are best practices available, there are investors interested, right? That is a good thing, that you could play at any spot that you would want to play at. And I really like the fact that much of cultural consumers will be Indians, as in we can't have initially, they are going to be us who will be consuming much of our cultural products. So I think a target should be domestic or expats. And that could be easy way of scaling up. But by and large, I think it's a great time to be in this particular space.
Thanks, Professor Suresh Bhagwatala. I'll come back in my second round of questions with all of you on some of the challenges, etc. Sunil, when you started Indic Inspiration to where you are right now, what have you seen from the consumer side of things in terms of acceptance of Indic Inspiration as a brand and the demand for such products, and also the interest from investors? Talk us through your journey and the fundraising experience.
I think a lot of us talked about timing and just so some things you try to do, because of timing, and some things you want to do, like Shifali mentioned, your own personal story of wanting to do something about something, right? And so I think all of that has kind of come together. I think the timing is that much better for the reasons that we just heard. There are also other factors like kind of pride generally in the nation these days, or the how easy it has become to reach customers and consumers, especially because of the online phenomenon. And there's also this thing, I've done tech ventures before, and you're always looking out for what will make your idea obsolete. I think culture is one thing that we hope will never be obsolete. So that makes it kind of a stronger platform, and with efforts of the government, with organizations like NICE, it's become much easier. On brand building, we're all learning, how to build a brand, especially in the culture space. Remember, we are talking about a space which is kind of half known to people, right? It's like, hey, I already know about Ramayana and Mahabharata and so on. What is this new thing that you're telling me, type of thing. So you definitely need to tell your story in a modern context. You solve a real problem, of whether it's of quality, whether it's of the range of products available, relevant products being available. You need to create an emotive connect with your target groups. Stories, not just products, for sure, is what we've found, right? There are lots of products around, but without a story, it's just gets down to price comparison. Yeah, even in the crafts. In fact, in the crafts, it's kind of more so. Like you might hear of these people who are saying, "Why is organic food so expensive when there's no pesticides being used and no chemical fertilizers being used?" Similar things are said about the handmade sector, where, hey, no machines are being used, and it should be cheaper, type of thing. But with a story, it becomes a complete product. You need to use your customers to talk for you. I think that is a strong thing that can be done here with the emotive connect that you can create with your first set of customers, get them to talk, and consistent and regular communication, which is much easier nowadays with technology. New ways of building out your brand has definitely helped. Influencers, bloggers, and then some elements of the regular PR, print media, online media. And of course, what's going to make this sustainable and for customers to come and buy more and more things from you is the entire customer experience, product experience, and which goes down even to packaging these days, right? I mean, did you send something out in plastic? And when you're talking about, the arts and crafts, yeah. So all of this, I think, helps in building out the brand over time, and you need to keep doing it consistently.
Thanks so much, Sunil. Thanks so much for your wise words, and thanks for doing what you're doing. Must be quite an exciting journey. Sanjay, if you hear, Sanjay is a co-founder of NICEorg, as you would all know. Sanjay, yeah, I wanted to quickly sort of take your views also in the panel. Given what Professor Suresh Bhavatula mentioned about this investable business and scalable business and lifestyle business, what sort of NICE vision, if you can articulate in terms of how we helping angels come together, building a network, enabling capital in this place as such?
Great, thanks, Vidya. Thanks everybody for your sharing your thoughts. I resonate with what Suresh said. This is a category where there will be a tiered set of companies. There will be companies that will be successful, branded companies delivering branded products and services or experiences at a city level, at a state level, at a regional level, at a country level, and then subsequently at the international level. And at each stage, given how India itself is changing, how the value chain of funding is changing, you're going to see lots of activity and lots of companies emerging, changing demographics, technology, et cetera, so all of that. And to be able to extract value from all of these, you'll have multiple classes of investors emerging over the next several years. And they will be able to extract value at each stage of this tiered approach. At NICEorg, our focus is on ensuring that the entrepreneurs receive the support that they need through education, awareness, mentoring, etc. We will also enable them to raise capital through the NICE Angels program that was launched less than a month ago. And so interesting companies would be matched with interested angel investors, and so that they receive the necessary financial fuel to go ahead and create the value that they wish to create. So all in all, it's an ecosystem that is in the process of being formed and built, and has shown enormous traction in the short period of time that it's been around. And I think that we will see a lot of wonderful entrepreneurs across this tiered set of capabilities and ambitions, and we will have matching investors as well. And therefore, I think for us, all of us who are interested in this category, whether it's for making money, whether it's for creating brand India, whether it is for providing livelihoods to craftspeople, I think all of us need to be part of this effort to make things happen the way we wish them to be.
Thanks so much, Sanjay. Thank you. I want to have, before I open up to the Q&A session, have quick questions for the rest of the panelists. Shefali, you mentioned earlier about the challenges in the sector, in investing in this space. Based on the deals that you've seen and the interaction with the craft-led entrepreneurs, what's your sort of quick take, advice, views?
I missed your last, what's your quick take advice is what you said, right? Okay.
Yes.
So, per se, currently we are stage agnostic. We invest across, as we would prefer being lead investors and active lead investors with early, revenue companies or growth stage, or even those who are in a reinvention stage. And the kind of deals, or the founders that we have met, we've met some pretty interesting, very diverse range of founders solving for different parts of the value chain. So that's pretty encouraging. We've come across founders who are trying to solve for at the initial end of the value chain, which is raw material procurement, right up to logistics, technology, and of course the usual marketplaces, both D2C and B2B brand building, circular packaging. So there's no dearth of high quality entrepreneurship that's going on in this space. I think the key challenges, if I was say, or advice to entrepreneurs would be, so I'll try to be brief on that one. So the first part of it is on valuation itself, because the valuations for some reason seem to be, moving in a direction which seems to be similar, to other startup stories, with the rest of the world, and the Whereas actually what may be needed in the early stages is to just build the strong fundamentals, get the addressable market size right. Don't promise huge, addressable market sizes given the business model. And focus should be more on value proposition building vis-a-vis valuation, if I may say that. So patience, I think, is the fastest way for these, because we have to do a lot of market making. And the linked issue separately is on crafting growth, because all entrepreneurs we meet are very strong, very passionate, and they have a lot of clarity in their vision and mission. But then there are areas they may need help on, and different entrepreneurs need different. Some are very seasoned, in terms of being very clear about their business plan and have clarity on attracting the right talent to help deliver that. And but many would need help in terms of writing their business plans, and ensuring that those are based on reality, and they're able to attract the right talent and retain them to work with them. I think that's broadly what summarizes. Of course, many other challenges. Investor interest in the sector is lagging, so we want to create some good poster children, wrong word, but really create some great success stories and seeing what success looks like, because we want to attract more capital and more entrepreneurs to be in this ecosystem. So that's my take on this.
Yeah, thanks, Shefali. I mean, since you mentioned about valuation and the challenges, etc., it's only appropriate I pose the question to Sunil and talk about what's his experience been, pitching his story and valuations with investors. You're on mute.
Okay. I think the first thing we learn when we first become entrepreneurs is you need to keep asking for money. Yeah. So if you're going to be shy about asking, it's not going to happen. Especially, the way all of us grow up and all that, that itself is a challenge. The other one is, when you go and ask for money when you desperately need it, right? That doesn't work either. So you have to keep working on it. Even if people are not interested right now, you have to keep them updated on your progress, and of course be able to state your value proposition and what you're going to do and how you're going to solve the problem. You should be able to articulate that well, and the opportunities are much better with all the work that's going on now, and the other factors that we talked about earlier. The angel pool is increasing, and I guess a lot of the IT guys now decided to do something about the culture space. Yeah, so that's good. And well, valuations, I don't know who understands it, but you need to, there's at least data available now so that you can kind of substantiate why you think it should be what it is. But without that, it used to be kind of difficult. And of course, but it does come through with inputs from people, looking at what's happening around in the sector, and then finally talking to a few people, going through a few negotiations, and then it kind of comes up. And when the first one in the round kind of does it, then it kind of falls in place.
Understood. No, I also want to check with Chandu, based on his investments that he's made. How does he see valuations in, say, tech startups as opposed to brand-led companies, culture companies? Chandu, your view on this?
So, well, if you take the classic global IP, India engineered overseas market kind of tech space, that's reached a different level altogether, and many of us find them too rich at this point in time. It's very challenging for us to even think about touching many of those. But even I find that the consumer space too, the moment fellows touch a certain level of even a MRR, monthly run rate, or an annual run rate, they start getting very greedy very quickly, and there are multiples which are assigned depending on the sector. If it's pharma, it will be sometimes more. If it's food related, then it can be a little less, but still it's somewhat high. So there are some multiples today, and I don't know how much some of these will last. So what we try to do at a very early stage, is experiment a bit. One is to leave discovery for later, number one, and say it's a discount to the next round with a floor and a cap, as they call it, that floor and a cap. So the floor and the ceiling, number one. Number two is sometimes we link it to performance metrics, that if you achieve X revenue, and an EBITDA, even if it's negative, we then say that your valuation based on these numbers or metrics, because if you're so confident that you can execute, many times in this particular businesses, can the entrepreneur execute in a relatively unknown space? Because many of these are still waiting to be discovered. So we also sometimes, in a couple of cases, have experimented with a revenue stroke EBITDA kind of a linked model. And that also, some entrepreneurs who really are confident are willing to look at that. So I think it's a process of discovery. There is no one size fits all approach, and different people have different takes on it. So like Sunil rightly said, it's sometimes like an arm wrestling match, So very challenging discussion, and it happens in every industry, and this is no exception. But what happens in this particular case, having been an impact investor, is I think you've got to be a lot more patient compared to a tech investment where exits and valuation multiples can be much higher. Here you may have to temper your expectations, number one. Number two, you have to be a little more longer term in your your ability to exit.
Thanks, Chandu. I want to inform all that the Q&A box is open. We've got a question from Majid Khatri. I want to post this with Professor Suresh Bhagavathula. How can an artisan become an entrepreneur? I think this is the crux of everything that we're doing today, right? The artisan to entrepreneur journey. What's your view? How things have changed? How things have become easier? You're on mute, sir.
Sorry. Well, Artisan has always been an entrepreneur. He wouldn't have been where he or she is had they not been entrepreneurial to figure out what colors, how colors fast, how should I use this particular technique. So none of them have gone to a design school, none of them have gone to a business school, but they run extremely aesthetic products and they run businesses. And if you look at, although it's a lot of people say middlemen are bad, I believe middlemen have been the one who have kept the market alive, and no social enterprise or ventures that are currently talking about taking away middlemen are actually middlemen themselves. So look at them as market intermediaries. Markets are distant from where the production is happening. So therefore you need intermediaries. But if you look at the way things are right now, here is a possibility for an artist to be entrepreneur without a lot of dependencies that he or she can directly connect to customers. And we see that happening with WhatsApp, with Instagram, and a lot of weavers that I have been interacting with in the places that I used to go to where they had master weavers. Now they're selling directly to customers, direct payments, right? So if there is a possibility for artisans to be entrepreneurs, it is now. It depends on like maybe, so we need to figure out how to put money in them because they're still taking money at a serious interest rate. There is no money that is available for them to start playing around. The kind of design activities are designed. So we have far too few designers in this nation, and design is like extremely exclusive. That shouldn't be the case, right? So we need to figure out how do you get them to be a little bit better at designing, crafting more aesthetic products in order to scale up the price in order to get more for their products, right? So the time is right. Access to capital, even a little bit of capital will change the game that they can play. And maybe we need to start to look at how do we create a design education for some of these craftsmen so that they can start to produce much more aesthetically nuanced products.
Thank you. Now, you would also observed and seen in the report that hardly any investments in the experiential tourism space for the right reasons, because last 2 years been pandemic and not much activity. But what's your sort of take on the space itself in terms of immersive travel?
You're asking me, right?
Yes, I'm asking you.
Yeah. So just before I took up my position here, I ran South Indian vegetarian tours for 2 years for a Dutch group of Europeans for over a month, right? So we ate in shacks, we traveled in small places. It was a super success way before anything called experiential tourism was even coined. It just so that I had to take a job, so I couldn't do that anymore. It is there, it is possible. It is the matter of putting it together. It is a matter of telling a story, and it is telling people what they will experience and then giving that experience, right? It's not as if everybody is here wanting to go see monuments. A friend of mine used to run a handloom tour of South India, bringing a bunch of weavers from Europe and taking them around lots of the small places. And we weren't really staying in high-end rest place. We were charging high, but we weren't staying in these comfortable places. We said that's part of the tour, right? So we will not travel AC, we will not stay in these big hotels. It is not, if you want to come here for a month. It's not going to be a week. So, but it is the story that you tell and then give them the experience. And I believe it has not been explored at all. I think it's a great space. Even like, for instance, right? Somebody wants to go to, even Indians, if you want to go on a craft tour, right? Like if I want to go see Kanchipuram, go see Venkatagiri, go see Uppada, and in between Mangalgiri, how do you do that? You can't do that, right? So just go to a bunch of handloom clusters. It's not possible.
Yeah.
Actually had a tour course which got accepted. We couldn't run because of COVID reasons. We had a motorcycle tour of small clusters for our IIM students, starting from Karnataka, going to Tamil Nadu, coming to Andhra, staying at the small places, looking at the small enterprises. Large uptake for that. So it's just a matter of being creative and putting these things together. Can we scale it? I really have no idea if it can be scalable, but small experiential tours are absolutely possible.
Fantastic, thanks. So, before we wind up this session, I want to get a quick response from you as a message to the entrepreneurs and a message to the investor. I want to start with you, Suresh. What's your quick message to the cultural entrepreneurs and a quick message to the early stage investors?
I think the time is now. The stars are aligned. So please do whatever you want to do. It is a probabilistic event. Doesn't mean success always comes, but then it's only by taking more number of shots at entrepreneurship you will become successful. Likewise, to early investors, invest, and you will see, because you are seeing early days. We had students coming and talking about how NICA came and hired students. So it is a time, or it is a sector whose time has come, right? Both for investors as well as especially early investors and entrepreneurs.
Thanks, Suresh. Sanjay, your quick message to the investors and the entrepreneurs.
Yeah, thanks. I think the time to jump in is now for entrepreneurs as well as investors. And I think one of the speakers talked about patient capital. I think it's critical that the mindset be appropriate and not get biased by the returns that one is seeing in the technology sector, and those two will get tempered. So I think it's important to be patient and at the same time be part of a great value creation process.
Thanks, Sanjay. Arun?
No, I think from all these success stories, is a keyword. The role models, that need to be developed and are already there. I think you really need to follow those as entrepreneurs, and as investors, they are going to be following the money and, in a sense, reading ahead. So somebody talked about, experiential tourism. You may want to look at something like a metaverse that is coming up, right? So a lot of possibilities that Chandu touched upon too. So, they're going to be following the money, and as entrepreneurs, we need to kind of tell those stories, and bringing all of these together. I think organizations like NICE are very well positioned and very well timed, to capitalize on this opportunity.
Thanks, Arun. Sunil, being the lone entrepreneur in this panel.
I think we all agree that timing is right, and I think it definitely is, with all kinds of elements of the ecosystem coming together, from product development, storytelling, or brand building, technologies around that, logistics, as well as bits of technology that can be applied to every part of the problem. And India definitely needs this, and we have thousands of years of stories with us. We just have to narrate them better.
All right, thank you. Chandu, your view?
So first and foremost, having seen both the impact space and what is the kind of this cultural space, which is not as evolved as, say, the tech space, one, I think a lot of entrepreneurs have rose-tinted glasses, and they come with certain kind of a baggage. Sometimes the hangover of the NGO sector also is there in some of them. I think they need to get a very strong business orientation. Second, many of them don't speak the language of the investing community or the new age entrepreneur community. So organizations like NICE must kind of educate them and make them prepared for this rough and tough world of investment. It's a very different world. Third, I think for investors, I think there's education on what cultural enterprises, creative enterprises are all about, and temper expectations. I also think there's a need for new financing models, in the sense of, I don't think everything needs to be only an exit-led return. Are there ways to even dividend it out and be happy? Possibly, because abroad, if you look at Shark Tank overseas, they look at different ways of getting money, the investors, licensing, dividending it out, not just exit or future follow-on rounds. So can we also start looking at ways, like Indic Inspiration with the licensing, potentially can look at licensing it out and, getting something if somebody helps them. So I think that those kinds of models also we need to look at. And I think probably you'll get a new set of investors who can come to it. You may also want to not look at, can you look at a more retail lending, or retail investing, much smaller amounts but larger number of investors through some special purpose vehicles. I think those kinds of things, if we start looking at, maybe, a NICE also as the catalyst can play that role.
Thanks, Chandu. Very valid points indeed. Shefali, your views before we finally close the session, please. Shefali, are you there? Probably, I think she must have dropped out.
She's dropped out, yeah.
Oh, okay, no problem. All right. So there's one final question from Arujit. Can a startup dealing in the handcraft sector become investable with just the idea or in the early traction phase without much sales or revenue numbers? Anybody wants to take this?
I think Sunil is the best guy because he took on a very new concept and tried to get investment. But I think he can probably, having walked the talk, he can answer.
Yes, Sunil, a quick answer, please.
Yeah. Yes, it is tough when you don't have much revenue. So it just starts with the faith of the first person kind of investing. And of course, we also came with, like 5-6 years of working with Artisans earlier and all of that. Just be at it and, get the first one to believe in you.
Okay, great answer, in fact. So thanks once again to all of you, all the attendees, all the panelists who've been part of this exciting session. Thanks to Arun and his team at Venture Intelligence for helping us put together this wonderful report. I think this will help the investment community as well as generate a lot of interest in the culture entrepreneurship space in the times to come by. So thanks once again for being part of this session. Thank you.
Thank you all. Have a nice evening. Tata.
Thank you all. Thank you.
Bye-bye.
Bye.